What is up, everyone? Let's talk crypto. Mr. Diamond Hands over here is being very, very depressed. I think we're going to have to put him on Zoloft. Articles came out today saying strippers are actually getting worried about a recession. Why? Well, because nobody's coming to the clubs anymore. And on a serious note, given the high print of inflation numbers that came out on Friday, everything sold off. In my previous video, I addressed this issue. I explained why we're going to have some fireworks on last Friday. That's exactly what happened. So what's next? What's next is very simple. On Wednesday, we have a Federal Reserve meeting. They're going to be most likely raising rates not only by 50 basis points as it's been already priced in, but maybe even by 75 basis points, meaning they're getting more and more aggressive. They have to. Why? Well, because the data is coming in and it's not peaking, because all of their analysis is predicated on the inflation data right now. And number one job of Papa Powell is to combat inflation, as he got a stern go to the principal's office type of meeting a few weeks ago with the Biden, because obviously with the runaway inflation, the Democrats ain't going to be being reelected anywhere, and that's going to be it's not only hurting the economy, but with the midterms in November, they will have to do something drastic to combat this inflation for those two reasons. In any case, politics aside, with the numbers coming in ever greater, ever harder, that means that whatever model of pricing in whatever model they were using and what numbers they were looking at to go for the 50 basis points. Now I think with the new recent data, they will have to go even higher, more aggressive. So what does it mean for you? That means if you're trading crypto or stocks or US dollar, it doesn't matter. Again, you're going to see ever increasing volatility, and volatility being how much the instrument moves. So when everything is hunky-dory and birds are chirping, Bitcoin might be moving 1,000 to 3,000 points a day, right? When shit hits the fan, like it did on Friday, you're gonna see those 5,000, 6,000 points moves, meaning the volatility now increased and the amplitude of the movement is ever greater. So why should you care? Well, if you're trading on leverage, for example, that means your stop losses will have to be, your position sizing will have to be smaller to account for ever greater volatility. So don't be cowboying it up with huge position sizes and doing silly stuff. Another point I want to mention briefly is markets are designed to do maximum damage, to inflict maximum damage on the maximum amount of participants. And with Michael Saylor being the one big target right now, he should be worried, because I think market is gunning down for his positions. And if ETH right now already is retesting 2017-18 highs, Bitcoin is only 5,000 points away, and I think that's where we're going easily, and probably even below. So how do you make money on this information? If you see Michael Saylor puking, meaning getting out of Bitcoin, you're going to have a huge spike down. And it's not that he personally wants to get out. His board might force him to start liquidating some positions to take some risk off the table. Now, if that happens and you see Bitcoin maybe at 10,000, 12,000, something like that, or even below 10,000. As in previous rally, by the way, ETH went from 1,400 to sub $100, by the way. So ETH right now being the high was what, 4,000. So we can easily go back to 400, 300, 200 if history is to repeat itself. So same thing with Bitcoin. If we go from we went from 20,000 to what, a couple of thousand. So you divide everything by 10 basically. So our high was in 60,000, right? High 60, and at this point, if we again at this point we can easily ascertain that it can go to 6,000 without a sweat, and then turn around and go back up, maybe go to 100,000. But what's interesting is if it goes that low, Michael Saylor will have to puke, and if he has to puke, that means you will get a chance of a lifetime. The chance of the lifetime will be for you to see, once you see that huge spike down and then it's starting to reverse, that's when you hop on that trade. That's going to make you a killing. It's going to make you a shit ton of money. So if this is obviously not going to happen tomorrow. This is something to keep in the back of your head. If you see, this is an unlikely scenario, but if it does happen, you will be picking up basically assets, cents on a dollar, from the pain of other people, which will be Michael Saylor. So I hope that little tidbit helps you in the future. And in either case, let's dive into the charts, and I'll show you what moves are happening short term and how to capitalize on them. All right, I'm going to start with ETH. Why? Well, because it's in a very, very interesting spot. As you can see right here, this was the previous, this is a monthly chart, so let's do it. Let's go on a weekly. This was the previous all-time high put in January 2018. Then we went on a 2-year hiatus, maybe even 3 year, yeah. Then we obviously broke out, retest, and had a very nice rally. Hopefully you all made money while this was happening. Now we're doing the opposite. So what's happening here? First of all, we've arrived at this point, which is a critical support. I think we might have some buyers trying to buy because, like I said in previous videos, this is getting a little long in the tooth. There's a steep sell-off right here. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 weeks straight of selling off. Even when it was 2018 here, you can see we had at least this thing trying to bounce. You had a blue candle here, blue candle here. So this is the previous 2018 sell-off, blue candle here, and then flush out of these lows, stop losses below these lows, flush out and reversal, another attempt, and then that was it for 3 years. So I think we're flushing out now again. We might have an attempt rally, but I'm not going to be buying at this point. Why? Well, there is a better way, the one I've showed you last time, a conservative way to get into crypto. So what you do is you have this line which delineates bullish and bearish momentum. So when you have the close above this, let me make it another color so it's a little more visible for everybody. There we go. So front and center. So right here, yes, obviously buying here is a little better than buying the breakout. So because this price here is 1,400, this price here is 1,900. So 500 points, nothing to sneeze at. But again, what if we don't stop selling off at the 2000? What if we don't stop selling off here? And since we're already probing this support, I think we can easily dip to this 200-day weekly moving average. Easy. So I think we're going to probe below this in the coming week. As I've already spoken about, the Federal Reserve is meeting this Wednesday. The hot CPI print on Friday is definitely telling us nothing is improving. And Fed will need to probably even jack up become even more hawkish to raise rates not by 50 basis points, but maybe even by 75 basis points. So as markets are pricing this in, that means this thing will be selling off harder and harder. So I don't think there's this is not the end of this story for sure. I think we're gonna dip below this previous 2018 highs as we're gonna break the support and go a little lower. We pretty much went through all the fibs already here. If you do the Fibonacci sequence here, you can see we've passed 782 and 702. Sorry, yeah, 702. Anyway, we can probably stop still at 718, 786. I'm sorry, jeez. Maybe this 786 will provide support. Maybe not, but basically we blasted through all the major fibs like this. Well, obviously 32, 50, 618, etc. So at this point, screw the fibs. We've blasted through all of it. I think we're gonna stop somewhere around 1100, maybe 1200. This is gonna be the next area. So another 200 points easy, definitely. Let's take a look at Bitcoin, and I'll explain why I think ETH still has room to go. So this is the same story with Bitcoin right here. This is 2008. Well, this high was put in December 2017, as you can see right here. And I think obviously there's still room to go to test this level. So if Bitcoin is going to keep on going down, ETH most definitely will be keep on going down as well. I don't think it's going to be just taking a pause while Bitcoin will still be going down because, again, Federal Reserve has priced in certain inflation. Now it's coming in hard yet again. That means they have to respond yet again more aggressively. If they have to respond more aggressively, that means we still have room to go to the downside. With stock markets, with currency pairs, because dollar is shooting up through the roof. Gold actually flew on Friday as well, and so basically, Bitcoin will definitely still has room to go here before the situation kind of normalizes, and that will take at least a couple of weeks, months before the new data starts rolling in, and that which might give us some kind of bullish story. Otherwise, there is no story to prop this up. This is just puke central at this point. So again, always look at the markets to see where the pain trade is. The pain trade is right now is to blow these stops. So people who were longing somewhere here all this time, and then they didn't take their stop loss on Friday, for example. I think that most of their stop losses will be below this point, obviously, right? So once we blew through them, we're going to have a nice spike down. That's maybe when we'll see some kind of, maybe we'll have a nice spike down right into the low 20,000s. And that's when we're going to maybe have some kind of temporary bottom yet again, maybe some kind of relief rally. We'll see. But if I was a betting man, and I am a betting man, I think these stops are going to go. So what should you do? Well, you should sell on rallies. So meaning if you're trading, not just hodling, day trading this thing, any rally into moving average cloud on a 4-hour basis, kind of like you see sell off, that little pullback. Let me zoom in. Sell off, pull back into the moving average, sell off, pull back into moving average, sell off, pull back into moving average, sell off, pull back into the motherfucking moving average. So this is the play. There is for now, I think that's the easiest play offered right now by the markets, and there is no reason to deviate from it because it's pretty straightforward. Shitty economic news, very high CPI numbers coming in. CPI is still, it's not peaking, obviously. So if CPI is not peaking, that means Fed is not doing enough. And if Fed is not doing enough, that means they'll have to do more. And if they have to do more, that means the pain is still to come with all the risk assets like the NASDAQ or Bitcoin. So sell rallies. You see a rally into the moving average cloud, maybe retest the breakout point here, this red line. We already did it though. So maybe this point right here will be interesting. See how a lot of, see how we had a lot of, oh, Jesus Christ, come on. There we go. See how a lot of candles were finding, they were probing below this level, and yet they closed above, right? So there's some kind of delineation level here. A bunch of orders probably sitting. So if you have this price have a little bit of a pullback right here, I would then expect it to go down. So you sell somewhere around there. That's basically the game plan for Bitcoin. And tomorrow I'm going to do a video for S&P 500 and other stock indices plus gold and the currencies. So if you like this content, please like, subscribe, leave a comment. We always appreciate it. This will, if you like this information, obviously spread around, because if it helps you make money, it will help somebody else make money. The more the merrier, right? So wait for the pullbacks. It's right now, sell on rallies. So you have a rally, and then a sell-off. You basically find previous support resistance, which is here, and then that's what you do. That's the simple game plan for Bitcoin right now. All right, hope it helps. Enjoy.